Welcome back. Part four of this five part series. My name's Kevin. I'm the CEO of Top Down Traders. I'm an educator. I like to teach people how to trade and how to be effective with their trading. In this series, we talked about a few different things about using your Fibonacci tools, something you can customize to your preference based on uh, what you want to get accomplished. Uh, Not everybody does it, and it's an option. It's not a mandatory that you use a Fibonacci tool, but it is a great tool because it does project future price. Now, I'm going to introduce to you another reason that I use Fibonacci's and the reason why I have different types of settings in my Fibonacci tool. So let's get started. Now, I want you to notice something here with this future projection, how it went right to the wick high. That measurement projects, and it lines up with the wicks high. Now I'm going to eliminate this particular one, and I'm also going to show you something else I do with a Fibonacci tool. Like I mentioned to you before, I have several different Fibonacci tools, and one area that I also like to measure is the wick as well. But I don't use the measuring Fibonacci or the optimal trade entry Fibonacci. I use a Fibonacci's that's in quarters, and here it is in 25% all black. I use that to measure the wick. So why do I do that? Some people may ask. Let me open up this one 15-minute chart. Why do I do that? Notice where the wick stopped. That tells me a lot of information. When I see this bullish candle wick there and return, open here, goes back higher, it loses momentum. Why did it do that? The reason why it did that, in my personal opinion, and I was taught too, that this wick took out any stops that might have been there. And when this candle went up, and just in case it might have been some stop losses it didn't take out, it's coming back to recheck. Because sometimes it spikes up so fast. I mean, it can spike up real fast and just take people's stops, and they call that a stop run, right? They're taking liquidity. Somebody had to stop there. This candle's wick took all the stops that are up there. Then it went back down. Then it went back here. There was no liquidity here because this candle took it already. And it also gives me an idea about a shift in the price and what I should look for. Because if this, as we start to go higher and higher, when I start getting candle closes above these areas, it tells me how strong the momentum is. And if you use a volume indicator, that'll give you an idea too. But something's really important as well. The time of day that you trade is very important. There's an algorithm that initiates every hour. In fact, there's two algorithms every hour, is what I was taught. 10 minutes after the hour, I'm on a 15-minute chart, so you can't see that there, and 10 minutes before the hour. So at 1550, there's an algorithm. At 1510, there's an algorithm. There's a macro, is what the proper name is. And if you don't know what a macro is, let me introduce that to you real fast, really quick. Uh, what does a macro mean in trading? Macro trading is an investment strategy that seeks profit from large-scale economic and political shifts, such as interest rate changes, inflation trends, geopolitical events, and GDP shifts across global markets. It focuses on top-down microeconomic analysis that positions its various assets. But that's not the macro I'm talking about. The macro that I'm talking about a macro is also referred to as a specific 20-minute window in time where liquidity moves are expected. That's the macro I'm talking about. So at certain times of the day, the macro is going to go in effect and it's going to seek liquidity. For 20 minutes, it's going to try to take out stops. It's going to do a stop hunt. And it does that twice an hour. Well, I wanted to keep this video short because it's very, very powerful when you understand how to properly use Fibonacci's, the different types of Fibonacci's, and how you can customize your Fibonacci's. With this particular Fibonacci, I have it in quarters, so I can measure the strength of the pullback or the strength of the wicks. And during a certain time of a day, 2 macros every hour, I can expect price to move to come to try to seek liquidity, either lower or higher. And it does it all day long. Price does 3 things every day. It goes up, it goes down, it goes sideways. It always seeks liquidity. Then once it seeks liquidity, if it doesn't continue higher, depending on the time of day and the day of the week actually, it will seek the liquidity and oftentimes reverse. Sometimes it will not reverse, depending on the time of the day and what direction the market's going in. Right now, we're in a bullish direction, and we're in consolidation right now until the market opens. This area of price, I would frame as consolidation. There's a way you can trade that. I don't like to trade it because it's too risky, but it's tradable. But you have to be on your chart and watching it, and don't go for huge gains. In fact, if you look at this, let me measure how much this has moved. That's 92 points on a 15-minute chart. You can trade that. You could even take this swing low, this swing high, and project it higher with a measuring tool. But you have to trail your stops, have tight stop losses, but it's time consuming. Preferably, I would just wait till we start to trend either downward or upward. So, that's another piece of information I want to share with you in this series. Just to recap recently, in the last video, we talked about time frames, how they correlate, and which one you should use. We talked about Fibonacci, uh, different types of Fibonacci's you can use, and I wanted to introduce you the quarter Fibonacci that I use to measure wicks and the strength of a move. So, so go back into your charts, play around with some things that you may have learned from this video. And this series is about to end. I have a few more things I might share in the next video regarding projecting future price, Fibonacci's, measuring. But, watch the video series again. If you miss something, take your time. They're not long. Please like and subscribe. Hit the notification button for you get updated on the next series of videos. If you have any questions or comments, please leave them in the comments. I think I have the comments turned on. And enjoy the rest of your day. Kevin Garrett, Top Down Traders.